Curious about how much mortgage amount you will pay for a house that you are eyeing on? In this video, I will show you how to guesstimate that amount in a snap and more. Stay tuned. Well, hello again. My name is Lei Villar-Cisneros, your real estate go-to resource in the Greater Toronto area, where I help families like yours achieve your home ownership goal. In today's video, I will share with you how to easily guesstimate the mortgage payment that you will pay for a house. If you stick around up to the end, I will share with you how to calculate the monthly payment if you're using a 30-year amortization and your deposit is 20% or more. And also, I will share with you a link on how to do this calculation if you're using different interest rate. And it will be up in there towards the end of my video. So whenever I show a house to some buyers, the first question that they ask me is, how much will I pay for a mortgage for this house or that house? So today I think of sharing with you how to guesstimate that amount easily without having to do a lot of calculations. We are going to use an interest rate factor. So if you are collecting those home guides or those home magazines, oftentimes they will insert an interest rate factor table by 1,000. It's still kind of hard because it's by 1,000, and as you know, houses in Toronto are in the 500s, right? So for example, if you have a $500,000, so it will be easier to multiply that or divide that if it's within 1 to 10 instead of 100 or 200 or 300. You get the picture, right? So using an interest rate to just calculate it in a snap. If you've been buying and selling a house prior to 2003, the interest rates back then is at least 5%, right? So I remember when I bought my first house, I was so happy because I was able to get 3.99, actually 4.99% for 4 years fixed, and it was one of the lowest rates. I was so proud of myself about it. 4 years after, so that's about 2007, the rate starts going down and down and down. And what I did is I had to break my mortgage. I paid 11,000 penalty, can you believe that? So that I would be able to go and convert to a variable rate, and I never looked back. In the spring of 2017, the feds have created a mortgage rate stress test. So this is the benchmark rate that you have to qualify for in order for you to buy a house, and that is changed every Wednesday. So to ensure that if the rate goes up, then you won't lose your house, because if the rate goes up and you are only budgeting for your current rate, then you won't be able to pay your mortgage payment, and then you will lose your house. So it's a smart way of ensuring that you would still have a house. And if you cannot qualify, that means you're not ready to buy a house. So as you know, right now the rates are still very low, and it's somewhere playing around prime minus 0.1 for the variable rate, and for fixed rate is 2.79. Okay, so moving forward, let's go ahead and pull that interest rate factor table, which I will show on screen. So on the screen, you will see an interest rate factor table, and how to use it is easy. Today, I will use the 25-year amortization because a typical buyer with a down payment that is below 20% will only be qualified for 25 years maximum amortization. So you cannot go over that. So as you know, mortgage amortization is the number of years for you to pay off your full mortgage. So using the interest rate factor table that I modified, so it will tell us that for every 100,000 mortgage, the mortgage payment is $584. for the interest rate of 5.04%. So now let's do the math. We know that for every 100,000 you are paying 584. So basically just multiply 584 by 5. If you're buying a house that is 600,000, so you multiply 584 by 6. Simple, isn't it? So the next time that you go and shop for a house, think about that number, 584. Now that you qualified for the mortgage stress test rate of 5.04, now you will enjoy the rate that the lender is offering you. So what if your interest rate is higher or lower than 5.04? So how are you going to easily guesstimate that? By using the interest rate factor table, which I linked below, you can easily do that. So how do you use this table? First, you go to the rows and look down for the corresponding interest rate. So once you find that, go on the columns and look for amortization, if it's a 25 years or 30 years. As I said earlier, if you are putting a down payment which is below 20%, you are going to use the 25 years amortization. Now, if you are putting 20% or more, you have the option of using a 30-year amortization or 25-year amortization. So what's the difference between the two? 30-year amortization means that it will take you 5 more years to pay off the full mortgage. But the mortgage payment will be slightly smaller. So if you are looking for cash flow, you don't want to be house poor while you're having your house, then some people will choose the 30-year amortization if they put a down payment that is 20% or more. If you have put below 20%, then you have no choice but you have to use the 25-year amortization. So I hope that with this technique, you would be easily able to guesstimate the amount of mortgage that you will pay. So take note that this is for the mortgage. For a house that is 600,000, you have to put a minimum of 5% for the first 500 and 10% for anything up outside of 500,000. So in that example, it will be, your down payment will be 25,000 plus 10,000 or 35,000. So purchase price minus down payment, that is your home loan amount. So with that example, 600,000 minus 35,000, that will be 565,000. So that is what you will use to calculate 584 times 5.65. And that's the amount of mortgage that you will pay every month. I hope that this video has helped you to calculate the monthly mortgage payment that you will pay for the house that you are eyeing on, so that you can easily put it on your budget. So when you're looking for a house, you will know exactly how much your budget is, and you will know how much house you can afford. Thank you so much for watching, and I hope that you will share this video to your friends and family. And also, if you haven't subscribed yet, please do it now. Thank you so much. Bye for now.